Hi, welcome to Confidence Wealth. I'm Crystal Oculee, the Chief Financial Strategist here at Confidence Wealth. And every week I try to bring a topic that's talked about. So this week topic is municipal bonds. I find a lot of people use municipal bonds because they're excited about the tax-free component. But it really is important to really take a look at your income situation when you are looking at municipal bonds. For example, I had someone just the other day telling me that their advisor had them because they didn't like to be in the market. So they were very, very conservative and they had almost their entire assets in municipal bonds because they felt like they're getting tax-free income and it's safe and they felt good about it. But after analyzing their situation, their income level was pretty low. So when your income level is pretty low, the tax-free component is not really helping you as much because what you're doing is whenever you purchase municipal bonds, you're purchasing it at a lower interest rate in order not to to pay taxes. Versus if you got normal bonds, they would be paying you a higher rate, even if you look at the same level of safety, but you'd be getting a higher interest, but you'd be paying taxes on it. But if you're already at a low income tax bracket, and let's say we're talking about this is your after tax dollars, then does it really make sense? Because again, you shouldn't be putting your pre-tax dollars, retirement funds shouldn't be municipal bonds because that doesn't make sense because that's ordinary income. So it's qualified money. So it's usually with after-tax dollars that goes in municipal bonds. But if you're already at a low income rate and you're not going to have capital gains for the year, why does it really make sense to even have anything that's tax-free where your tax bracket was low enough that you weren't going to pay much taxes to begin with? So you just gave up maybe a couple of percentage in interest thinking that you're doing something positive. So be really careful about tax-free investments and what they truly mean. I think that's one of the things that, holistically speaking, it really matters. What we find a lot of times, unfortunately, people are working with brokers or investment advisors that really don't understand tax planning aspect, and they're, offering investments thinking of the cliche, the ordinary thing of like, oh, it's tax-free, so this makes sense. So it really has to be combined with your entire situation, what the rest of your income looks like, what write-offs do you have, and when it makes sense to, example, use a municipal bond versus a regular bond. So I hope this little tiny short video helps you understand that tax planning and investment planning are really intertwined together. If you have a bunch of municipal bonds and you're not sure if you should be holding them or not, or if it makes sense and you're getting the most for your money, then go ahead and reach out to us and we'll be happy to do an evaluation for you. If you're already a current client, we already always look at all these things for you anyways, but if you have questions, you know where to reach your team. In the meantime, until next week, wishing you a fantastic week full of prosperity and lots of good things. Have a good one.